Hello YouTube, Steve here, and we have had a pretty good trading day today. Lots of volatility, lots of big moves. If you were a directional trader like I am, then you had a pretty good day. NASDAQ in particular, from when my short signal went live, a little bit after 7 o'clock this morning, it was a drop of around 400 points. I was not trading the NASDAQ, I was trading the S&P E-minis, so not quite as much movement there, but I still had a pretty good day as well. Anyway, let's hop right in. So as you can see, we are looking at the ES 8-hour chart that I've mentioned is my preferred method of swing trading a lot of things. As you can see, it's performing exactly as intended to. We had the long signal down here, little ways off of the bottom of this correction, and pretty much all the way up we are still holding just above, coming out of the overbought section, but we are still holding long, so that's doing pretty well for us, up a little bit over 100 points so far. So moving on to gold, which we went short yesterday. That was clearly not the optimal move. However, we are still in a shorting situation here, and I just swapped over to the daily, which, as I've mentioned, I'm not really a gold trader, but we're still kind of in this upward channel here. We'll see if that breaks down, but we're mostly just following my indicators on this one, so I'm not going to worry too much about that. It's fake money, not really worried. Moving on to the Russell. Same story here as the S&P. We rose up. We're kind of in a channel here. Maybe this will turn into a bull flag here. Maybe not. I'm not holding my breath. I don't trade the Russell myself anyway. This is just sort of for rounding out our watch list. Not really a whole lot to say. Yesterday I was talking about how we came up and we hit kind of this resistance level, and that has still held tight here. We got a pinwheel going on, and we could go either way, but I'm leaning towards bearish. But until we get a signal down here, not going to do anything about that. We're still sitting on a pretty tidy profit, so not bad. Moving on to copper. So far we are holding above what used to be this resistance level right here. It's now turned into support. We are still bullish on both of our signals, but we are kind of hitting a little mini ceiling here. We'll see how that goes. I am, in macro terms, bullish on copper because of electric vehicles, among other things. Electric vehicles use a significant amount of copper compared to traditional internal combustion engine vehicles. Even hybrids still use a lot more copper than traditional vehicles. So that's something to keep an eye on. If you are bullish on things like Tesla or any of the other EVs from any of the other companies out there, GM, Ford, whatever, this is a good thing to keep an eye on. I like copper. It's one of the weird ones, just like natural gas, where I like it for macro factors rather than just sheer technicals. But I can still trade it on technicals, so that's fine. Moving on, we are now looking at crude oil, and we are still long. We've still got a pretty solid bullish move here. But as I've mentioned before, crude is one of the ones where the same thing as my 8-hour S&P strategy with my oscillator here, it works really, really well. It's nice and smooth. You catch all of the big moves. All of your shakeouts are really small. Your losses are minor. You don't really have to keep your stop losses too tight on this one, as long as you have deep enough pockets to take a minor hit without getting a margin call, which, if you actually do not have pockets enough to avoid a margin call on CL, you're going to want to stick to micro crude, which micro crude at this point has been going on. It's been live since, I believe, July of last year, so it has plenty of volume. You can still work with it. It's fine for day trading. I've done that before when experimenting with different strategies. The price action's more or less the same. It's honestly a lot more fluid than the mini oil, in my opinion. So yeah, if you can't do CL, then do MCL. They're both pretty good. Moving on, natural gas, same thing as before. We are in this nice range here, good for day traders, not so much for swing trading. We haven't declined too much since the video yesterday, where we were down by a little bit less than we are now, but we're still in this tight range. So until we break down here, I'm not going to worry too much about it. We've got bullish signals on both indicators here. very, very mildly bullish, but still bullish nonetheless. So we're going to hold steady on that one. Moving on to the T-bonds. I have been basically beating a dead horse on how I am not bullish on Treasuries at all, and my opinion there has been spot on. We are good. I mentioned before, yesterday, rather, about how we keep kind of crushing these support levels, and this was one that I had mentioned yesterday, which was an area to keep an eye on. And you can see that the current price is like right on the bottom of this hammer right here. So if we move back by a little bit, you can see that there are some more support levels coming in, and those are something to keep an eye on. I don't know how much further down it's going to go. Depends on how the next couple of FOMCs and Powell and all them, whatever they happen to say on the news. Whenever he says something, I tend to lose money, so I prefer to be out of the market. So I like to blame him for a lot of things, even though it's actually probably my fault. I try to avoid being in day trades whenever any macro events happen, just because they're so unpredictable. You know, sometimes if you're on the right side of one, you'll make bank, but at the same time, if you're on the wrong side of it, well, you're obviously going to be on the losing end there, because the volatility gets extremely whippy above and beyond what any market open is going to be. So you got to keep an eye on that. If you are going to trade any of those events, I recommend doing it on a volume tick chart, if anything, because that way, at the very least, you'll be moving along with what the price is actually doing, rather than, like this is a time chart. You really have to, if you're using indicators, you're at the mercy of hoping that the price doesn't move too much in the direction you don't want it to move in before you can react. Whereas with a volume tick chart, you have a lot more leeway there. So like whenever I trade the market open, I'm on a volume tick chart every single time. I find them to be a lot more reliable, and I've had significantly fewer losing days since then. Moving on to the 10-year, same thing. I mentioned in one of the previous videos how compared to the T-bonds, my 10-year position had been really, really lukewarm in how it had been performing, because we were kind of moving sideways in directions that I hadn't really wanted to go in, and then over the since the new year, it just right off a cliff. Fantastic. It is finally starting to perform along the lines of where the bonds are. So let's see. So ZN and ZB. Yeah, well, ZB is it's beating it 5-4 to 1, so that's just kind of how it goes. But I'm not a Treasuries guy. That's not what I trade on my live account most of the time. So moving on to silver. Exact opposite of gold. It looks like we have a cross here, possibly forming, but because we have it shaded in the red there, as you can see, you know that we're in the overbought area, which the way that I use this oscillator, as I've mentioned, if it's in the overbought area, that's what I call a breakout area. We don't touch it. Same thing if it's in an oversold area, that's a breakdown area. Just like you can see with, right as it comes off of this massive climb here, as soon as that green shading goes, we are in the oversold area. However, we still have a long way down before it actually starts to rebound. So you got to be careful with exactly how you try to catch a reversal, because it's what's called commonly catching a falling knife. You're going to get stabbed in the hand. So that's about it. We are back on ES, and to go over what I mentioned at the very beginning of the video, we had a fantastic day as far as trading goes. I was doing this on a volume tick chart, so I was able to catch this rebound pretty good. And then if I look at 1 minute, it's probably going to be a little bit more accurate there. Yeah. So let's see here. Yeah, really, really choppy at the outset. But one of the nice things about the volume tick chart is that on that chart, this whole thing where it's looking really, really choppy, and that's a solid range from 4,800 up to 4,808. That's 8 points. It's not huge, but it's fair enough. It'll make or break you if you're trading fully E-minis and you don't have a lot of room to work with. But on a volume tick chart, basically this will just be, it's just flat. And flat and flat and flat. And I remember this part annoyed the hell out of me, because I was shorting from around here, and then it just kind of shot up, and I was like, oh, there goes my gains from that trade. But luckily, I held on. and then it immediately benefited my patience there, and I was able to catch it all the way down, and then closed out. Unfortunately, I wasn't able to trade the rest of the action today, which there were plenty of good trades, as you can see. This is the kind of thing that I would switch over to, like the 3 minute or something, because you can still catch a pretty good number of smooth trades here, even if you're just doing like indicators and stuff. Although the after a huge move like that has been made, if you're doing something based off MACD, it's not going to be nearly as effective. Because you can see, like, even as it's declining, it's still like, oh, this is still green. That's not going to help you very much. So you're going to want to switch to some sort of other method, which is kind of how I reprogrammed my oscillator down here, which I've mentioned before. It used to be a stochastics oscillator, which I changed it from being a measure like RSI of oversold and overbought to being a lot more directional. Like, you can see basically all the way down, apart from like this huge jitter right here, it's showing the direction being, bearish the entire time till we get down here. It starts rebounding. All right, now we're bullish again, kind of flat during the this whole little area. On my volume tick chart, this just shows this is a straight up double top. Instead of all of these bars, there's like 5 of them, because I use 2,000 ticks on the ES and 10,000 on NQ to just kind of smooth things out. But you can see how, like, the MACD is like telling you to go long, literally like right as it hits the peak of the rebound, and then you just kind of suffer, and then manage to kind of break even as you hit the bottom of the continued fall here. Thankfully, though, it does react pretty well here after the volatility sort of dries up by a little bit, and lets you catch the rally into the end of the day. But at the same time, the oscillator down here, while it does have a little bit of over trading tendencies, for conditions like this, it's optimal. You're going to be spending a little bit more on commissions because you'll be in and out of trades a little bit more often, but at the same time, you'll be able to start the rebound like significantly lower than MACD. You'll be able to catch all of these different moves significantly faster. So you really kind of have to weigh the cost benefit of if you're going to be hopping in and out of trades for a couple of ticks, then it's really not worth it. But if it'll save you losses on points but cost you a little bit more in commission, then it might be worth it. You really have to do that kind of cost benefit analysis yourself, because I can't make that decision for you. And that's what a lot of the new traders and some of the groups that I'm in have problems with. They'll be like, oh, you successful traders, what are your strategies? Well, the thing is, I can give you the best strategy in the world. You won't be able to use it most likely because it's tailored to me. When I mess with all of my indicators, I don't just try to optimize them for like the best entries and exits and all of that. I want them to give me specific information for specific situations. And so the advice that I usually give the new traders is to just learn as many things as they can, learn as many indicators as they can, price action, different types of charts, volume profiles, all that stuff, and then kind of develop your own strategy based on what you know. Just kind of think about what you're trying to accomplish, and then try to use the tools that you have to make that happen. But anyway, I'm rambling like I usually do. So we are not going to be making any new trades today. Just that short gold position from yesterday, which is still kind of kicking me in the butt. We're down $1,000 on that, but that's fine, because I think yesterday we closed at plus 21,500. Today we're up to 23,300, and so we're still doing fairly well for the new year. So we'll see how that goes. Hoping to get back up to a 100 grand soon. We've made faster progress than I actually expected, but I mean, given that I went from using a faulty script that isn't working properly over to actual strategies that I actually use on my live account, although with a little bit less thought put into them, it kind of makes sense that we'd be doing better now. So yeah, I will see you guys next time.